What's going on, Chris? Welcome in. Everyone should be gathering here shortly, probably a few minutes. To everyone sees my message. I know we're a little early here today. Let's take a look at something real quick. Let me see. Wow. Okay. Seemingly crazy. Did not know that SPY actually closed at 452. Wow, we're way down there. Welcome in, guys. Welcome in. What's going on, Daniel? What's going on, W? Surprisingly, I actually realized that today I realized I did not change my name in Discord. It's still Bear Drake. And actually, coincidentally, it actually still is fitting. It's very fitting right now to what this market price action is. I gotta say that. What's going on, W? Welcome in, guys. Welcome in. Well, I gotta say, today's price action was actually pretty well. But then Facebook just had to ruin everything, didn't it? What's going on, Wiley? So, you pretty much hearing me as a broken record. I think it's been already a few weeks. And I think today was just one of those days where if it didn't prove it yesterday, maybe it did today, in which I typically say do not swing positions. And this is basically why is that you see this whipsaw action that we're getting, whether it be to the upside or the downside, in which you least expect that kind of movement. And that's basically what you got. We had since last week we had Apple have its good earnings, Microsoft was a little bit flat. We got Google just ripped the whole market north, and now we just have Facebook just pretty much wipe out all of those gains from yesterday. So that's basically what I pretty much saw. And then we're also going to complete the mega cap tech stocks come tomorrow afternoon when we have Amazon, in which that's probably going to be another wild swing. So if you haven't heard me say it already, again, be careful your swing positions. And this is why I pretty much just wanted to just say that to everyone. And I've basically been trying to follow that rule as well. And just before I start, also, we are going to be doing Twitter Space today. So it's going to be starting right around 9:30 or so. That's why I'm a little bit early here on live. So you can catch us on Twitter Space at 9:30 here in about 30 minutes or so. You'll catch us on there and we'll discuss the market, the volatility, what we're looking for into the rest of the year, how this year has really just been different in general. But this pretty much goes back to saying, what I pretty much would do for myself. This is where I'm basically giving you the same advice. We see how when you can be wrong in just one night, basically what that can do for you, basically. What's going on, Jonathan? You took spy puts. I'll I'll actually get to my watch list. The funny part, Jonathan, I actually made the watch list before I realized what Facebook did to the market. So the watch list got a little bit ruined so far. But I think the bear plays are really gonna be the one that ends up playing out. And I also saw Avery was like, I can get behind that once I said Apple puts. So I know my Apple puts are gonna end up paying tomorrow. But I'll see. I'll go through the watch list, see what's actually still valid and what's not. But I think a lot of that kind of got invalidated based on the market action here this afternoon, and I'll take a look at them though. But again, what I would do for myself is pretty much what I've been preaching to everyone else: is not trying to swing positions. Obviously, you hear me saying I took an Apple put position primarily because it was pattern based. It wasn't necessarily from the broader market perspective, but it was a very small position too. So there's nothing crazy that I'm really worried about that I'm risking. And that's the bigger thing is that you do not want to get caught in this whipsaw. We see this market just ripping north, just as volatile as it is to the south. And that's what you want to be pretty much aware of. All right. Randy, nice to see you, guy. How's it going? So, looking at my SPY chart, as we get into the charts here real quick, I actually had this charted out already before market close, just looking to see basically giving you an idea of what direction we were pretty much headed. It was either we were going to continue this little rally as we had this little ascending channel action, continuing to break out of this, pretty much the resistance, breaking north, and going into this gap fill. And I believe that was maybe some of what the traders had on live, in which we were going to pretty much approach the gap fill, if not fill this gap fill over this 460 level, in which it would complete over 463. But it looks like that has actually been pretty much tarnished right now based upon this after hours price action. And now we pretty much broke south. So we basically wiped out today's price action. From today, we opened up right around, we gapped up over probably about 453. SPY closed right in after hours, right around settling around 452 mark. So we see that we pretty much wiped out as if today never existed. You see the little rising wedge action. If I zoom in just a little bit, you can see we're trending into a rising wedge action. I probably need to put that in the black. But as we see, there's been times where we end up breaking north and breaking resistance of rising wedges. And that's what I think a lot of traders were anticipating. There were so many bullish traders out there just saying that we were practically just going to continue to go north, that maybe the big boys were continuing to buy. Maybe they saw this coming, maybe they didn't, maybe they took their profits, but we see this actually did break down as it should have. It broke that rising wedge to the south. We're sitting at 452. My next level that I was watching, as you see right into my zone here, was 450. That was the level that I was targeting tomorrow. If we continue to drop, then I'm targeting down to my next level here, my next zone, which would pretty much put us right around 44.8, 448.30 on SPY. All right, that would be in my entry into my next zone. So bigger picture, you're targeting 447, 448 if we lose 450. All right, those are levels that I'll be watching, and so I would expect we're gonna continue to see these dip buyings going into tomorrow. So don't try to get faked out with all these buyings that you're probably gonna see. It could be that we end up forming some type of bear flag, maybe a little bit of a recovery tomorrow, and then bear flag into close. So try not to get caught up with all of the buying pressure. We may have flow alerts probably go crazy quite a bit tomorrow with all the dip buying that's going to go on. So just be cautious about that. Just wanted to throw that out there for you guys. But again, 450 is the bigger picture of what I already had before I saw what SPY did after hours. And then if we lose 450, then I'm targeting more so 447 would be that bigger target that I'm looking at, in which that'll likely put SPY about down about 7 points tomorrow. We're down about about a percent right now. We're sitting at down 4.65 on SPY. So that will put us down if we hit 447 tomorrow. That'll be about another 5 points. I don't see why not. So that'll be targeting. I mean, it may not be all in one shot tomorrow, but granted the volatility that we've had, maybe it's coming right back into the market and we can see SPY down about 10 points. Would not be surprised at that. All right. So that's my analysis of pretty much what I'm looking for SPY. We'll pretty much reevaluate tomorrow. Breaking levels nonstop after hours. I think it deserves to be reevaluated tomorrow morning. So take it with a grain of salt for right now, but those are the major levels of pretty much what I'm looking at, and there'll be a better analysis come tomorrow morning. Once we see if we see accelerated the gap down going into tonight, as we see futures are just going down and melting, or if maybe we get some kind of rebound tomorrow morning. All right. So I'll get started pretty much with the one that I actually called out right into market close, and I pretty much announced what I was going to end up holding, and it was Apple puts. So this was just basically a textbook rising wedge. You see it hit right into this candle wick, right into the wick here, and we see I basically had an identified resistance. I know just recently, maybe yesterday or the day before, I heard Avery also talking about it going to 175 and some change he had as his price target. That pretty much aligned with where I was expecting it to go. I wasn't expecting it to pass 176. And that basically aligned with what I was looking at as well. So it's usually a good thing when you actually have more than one trader pretty much aligned with the same target, same median of what you're basically looking to get a reversal spot. And that's what I saw. That's what I want to take advantage of. Granted, the fact that I still went small, had I known what Facebook would have done to the broader market, obviously I probably would have went in deeper. But basically, as I said, you want to be cautious with the swings. There was nothing here that I was risking overnight that I was going to be worried about making up the loss. So that's why I'm happy with what the gains will be potentially tomorrow morning. But that was just a beautiful breakdown here. I was watching it to break down under 174.62. She's currently sitting about 172 after hours when we finished. And then I have my targets here set. That was about 173 mark. And then my second PT here was 172.16. So she hit my PTs of what I was watching. Now, if I actually look at Apple, let me actually see what her next level is. So I can take a look real quick. Let me see what levels I was watching on the next ride down here. Looks like her next major support level is going to be 170, 160. That's going to be her next major pivot point, is what I have noted. Below that, we're likely going to probably crash line in which market volatility is going to escalate, and we'll see her go down towards 168.64. So those will be the two marks that I'll be watching on her if we continue to get down on Apple. She had a massive run. You already see the gap fill that's down here. If I highlight it, you pretty much see how big it is off of that earnings gap that we got. So she has a ride down. It may not be tomorrow, may not be this week. Just something to take with a grain of salt, but take it level by level. And that's basically what I would say for right now. All right. The other ones I was watching, and these are pretty much other names outside of more so out of tech. I think NXPI was one I was watching also. This had a little bit of a rising wedge action also. I think it probably looked better on the 30 minute. Yeah, it looked better on the 30 minute. So a nice little rising wedge action. I think it was down about $1 or so after hours. She was also when I was watching below 206.40 here. I'm watching her targeting down to a pivot level of 202. This is another one pretty much will coincide with the market trend likely tomorrow here to the downside. So this one will still be valid here. I'll be watching this one and probably take a nice little day trade off of NXPI here. The other names were pretty much more, I want to say, risk-free names, type of names. They're a little bit more slow-moving. One was Pfizer. I think I called this one out, and I believe SIG actually liked it to the upside. I believe it's down about a few cents after hours, but I'm not too worried about that. The bigger picture here, and why does it look so much different? Let me see, was it off the 2 hour maybe? Probably looked a little more like, yeah, it was off the 2 hour I charted it. But you see this nice little descending channel. You see the gap fill in which we pretty much already completed it. But the bigger picture is, if I pretty much zoom in here, you see the nice little inverted head and shoulders action. That's what I was primarily watching. So if you're looking to play something to the upside, it may potentially be Pfizer here. Once you get the breakout over 54.18, then I am targeting 55.70 will be my target for that next pivot to the upside. So this will be a nice little mover, small mover. You're not pretty much risking too much here. So I like this one in particular, especially if we do have a lot of market volatility and you are looking to avoid that volatility. This may be the name that you want to point your attention to. All right. The other one was pretty much outside of tech, and I was watching Nike. I believe this one's down maybe about $1 and some change after hours also. But I was pretty much watching for a move here. We get a break over 149. Then I'm targeting a next level here right into 140, 150, 130 will be my mark that I'm looking at. So this will be a beautiful one, especially if you're trying to avoid again the volatility, the tech names. Turn your attention to Nike, and that's why I'm giving you guys different varieties. Pretty much like the other night, I was looking at Marathon Petroleum. That was just a banger. If I actually pull up that chart, that was outside of tech, and despite tech actually rallying, if you remember, I pulled up this chart. I literally had it breaking this level right here. Once it broke that 72, she cracked my level here from into yesterday, and she literally gapped the hell up and it was gone. So that was just a beautiful one I had on the watch list the night before yesterday. And so that's why you see I'm pretty much looking at names outside of tech as it's been so volatile. And I believe the last one I was watching was just Target, which it may be down just a bit, but I still think we're gonna get a nice little curling action to the upside. I think it's down about $1 or so, nothing crazy. But once we get a breakout here, watching over 219.32, we'll get a nice little run right into resistance here, in which we'll test. It may be shifted, probably get a move right into 221. So about a $3 move you'll probably be watching on target, and then the potential larger time frame breakout that we'll be looking for. So that's a beautiful one. This pattern actually kind of reminds me of how Walmart was. If you guys remember how my Walmart newsletter play ended up going out, this was just a banger pretty much. If you see the nice little descending broadening wedge action similar to what Target looks like right now, you had that beautiful little breakout and it just went north. That was one. I believe the other newsletter play I had was, I think it was Disney actually. Yeah, it was Disney. Disney, was it Disney? It could have been. It could have been not. May have been or may have not been. All right, I kind of lost track on that one. It might have been something else. Lost thought on that one, but pretty much you see that I'm pretty much identifying the patterns looking outside of tech, and that's basically the bigger point about that. All right. So hopefully those names actually help. But if you took the Apple puts, I believe I also called out a Lotto for Snap puts also. That ended up being a beautiful sympathy to what Facebook's debacle was. Basically, I think Snap was down about $6. I believe it settled right around 25 and some change after hours. So that was a beautiful one. I was also watching another Lotto which didn't play out too well. That was Align Technology. But that one, it wasn't down as much as I expected. I was pretty much banking on a bigger loss. But it is what it is. Not too worried about that one. So But other than that, I think that pretty much is what I'm watching. We'll see what futures end up doing by morning. Again, I expect a lot of levels to change by morning. I don't expect to see us either we're gonna be down much more by morning, or we're gonna end up getting a nice little rebound. So I don't expect it to be as it is. But one thing that should be noted is, and this pretty much follows up with what I was saying about your swing positions, is that we see all these big tech names pretty much swaying the direction of the market. Be cautious with the last one tomorrow, with Amazon being on that list tomorrow for earnings, because it does feel as though, since we saw what Google did to the market, what Facebook did to the market, we're likely going to get some kind of major reaction with Amazon earnings tomorrow. So just something to be aware of before you pretty much pull the trigger and buy anything to swing overnight tomorrow. Be aware that Amazon is going to report the earnings and they are going to sway the direction of the market. All right. So I just want to make sure I pretty much look out for you guys and give you that pretty much that advice before you take the wrong position and you pretty much regret it the next morning. All right. But I really hate that. And the bigger thing that I actually noticed, and this is why it's so hard for a lot of us to hold positions for so long. What I actually used to do holding positions before, looking for max gains, looking for percentage gains north of 50%, is not the case right now. One, because obviously because of the volatility, but because of the fact that every single new low that you potentially make on a lot of these weaker names, you end up getting such a bounce that it kills premium on both sides, calls and puts. So you have to be a sniper in this type of market, especially. I think it was with Tesla that I ended up getting in. I had 900 puts. I was lucky enough that once my 900 puts went right in the money, I took it, pretty much took my profits, and I literally just saw it rip north of $11 and just chop up there. So that's why I pretty much say you have to be pretty much a sniper in this market, and you pretty much want to avoid trying to swing trade. Because if you haven't learned your lesson yet, I don't want it to catch up to you, in which you end up having to endure that overnight loss. So that'll be my message tonight, guys. Again, we're pretty much going to be switching over to getting into Twitter Space here shortly in a few minutes. About 9:30 Eastern is the time that we'll be getting on. So join us as we pretty much discuss the market, pretty much the year that we're looking at, discuss other trading styles, other personal advice for pretty much navigating the market, as you usually hear me saying on a nightly basis. But we'll get a nice little roundtable discussion with the other guys here, the other guys from live. You'll have us with Tay, with Avery, and also with Tom on Twitter Space here. All right. So a few minutes, join us on Twitter, and we'll be discussing some more things in depth of the overall market. All right, guys. But that pretty much concludes tonight. We'll see what levels we have tomorrow morning on live before the market opens. If there's anything that's worth calling out. But one quick question, let me see. Facebook. Mm, Let me actually take a look at it real quick. I'll take a look at it real quick off of the daily, probably. I wonder if I can even look at this off the daily. Probably have to go off the weekly to look at Facebook. I think my long-term level on PayPal, and we saw how much PayPal actually died, was 121. Let me actually take a peep real quick. One other quick thing before I give you a level on Facebook also. Damn, she is down quite a bit. 249 is where she's sitting at right now. So 249 is where she's sitting right now. So I do want to get a level out there. Right around 249 is where she's currently at. If I were to say if this market volatility is really going to continue, I can see her coming down pretty much as low as about 209. It's entirely possible if she comes down to about 209. If that's going to be where she ends up retesting, she's going to wipe out all the gains from 2020. And we likely get where we ended up breaking out of. That will be the spot. If you see, that's pretty much where we had a nice little. This was one of our resistance points here off of this trend line. We anchored here right into the middle off of the same trend line. And then the bigger thing is that also we ended up retesting that same level also off of this wick right here. So that leads me to say that this is going to end up coming down all the way down to about 209, 210 will be the spot where I would tell you to go long on Facebook. For right now, you're pretty much going to get likely a dead cat bounce until the market continues to roll over within whatever time frame it decides to within the next month or two here. If that obviously we know that the market's going to end up going down here. There's more downside. It's just that what we don't particularly know is with the time frame of that. So you're likely to end up getting a nice bounce off of Facebook from these current levels, and then chop it, pretty much just chop around. But then overall, you're gonna see a steeper decline in a lot of these bigger tech names. So this level I would tell you is 210, 209, 210 would be the level I would pretty much tell you. All right. Same level as Avery, Magical. All right. Well, actually, that's a very good thing, especially when we have the same level. So that's a very good spot. And as you see, you would pretty much be wiping out most of the games from 2020. So that pretty much aligns with that. So 210, 209 will be the spot where I tell you scale in or you go long on that. All right. But I think that'll conclude tonight, guys. We'll get ready. We'll switch over to Twitter Space, and I will see you guys over there so we can start discussing the broader market and some individual advice and strategies. All right, guys. But I will see you guys again. We'll switch over, and I'll see you guys over in Twitter Space. All right, guys. Have a good night.